because they have become a very large part of almost every investor's book, right? I'm just trying to understand. They got a big fillip because of the kind of gains people made in public markets. I'm wondering if that space sees a significant cool off as well because of what's happening in the public markets, or could the template out there be different?
Neeraj, I would really, stick my neck out and say that market is going to give the maximum pain. Particularly what has happened over the last 1.5 years, there was so much capital available and there was such a huge FOMO. Any company with a presentation was able to paint great future and raise capital left, right, and center. And I think that went in a lot in private markets. We also launched a private market fund, mid to late stage. Luckily, we follow a disciplined approach where we are value conscious and we don't invest in loss-making companies. And we're drawn on 20% of the corpus of 2,400 crores we raised, out of which we have invested around 75-80%, but in good value companies. So we are quite, sure that in the next 6-8 months, we will get great opportunity. Because one, the propensity and the eagerness to invest in private market will go down significantly. A lot of investment, as I said, which has gone into private markets in the last 6 to 12 months, is going to give a lot of pain, particularly to large, high net worth individuals and family offices who had high risk appetite, and therefore the due diligence process shortened. I jokingly say that in bull markets, the time to research reduces and the bet size increases. And in bear markets, the time to research increases and the bet size reduces. So last year was a time when the time to research was 2 hours and the bet size was 50-100 crores for each investor. The company used to come and say, "Bhai, dalna hai to dalo, nahi to isne dala hai, isne dala hai, aapko dalna hai to dalo." There was this FOMO. So I think over the next 6-8 months, 12 months, that segment will again give opportunity. Right. But I would say that what money has been raised last 6-12 months is going to give a lot of pain.
Got it. Yeah, fair point. Maybe researchers or fund managers, it might be a good time because there will be enough time to choose and pick where you want to invest as opposed to it being running out.
But I'll just end. No one likes bear markets, and it is very painful. But I think in a cycle of markets, and we have seen that over the last 25-30 years, sometimes these kind of pains come, and it's very easy to say that बेच देना चाहिए था, फिर ले लेते थे. That doesn't happen. And frankly, it is very tax efficient. So, say if our funds have gone down by 10-12%, even if you would have sold and bought it back, that much money would have lost in taxation. Yeah, and then, entry point, exit point, impact cost, and so on and so forth. So these things happen. I think it is best to be a little bit patient. I know it is very tough, and particularly for people like us who manage public money. And I really, sympathize with the investors and RMs, and therefore we are doing a lot of calls also, because this is a time to handhold and give, fair advice. But please stay put. Don't try to do anything exotic. You might defer your investment. That is fine. But just don't sell because you are scared. You can adjust your asset allocation. If you're significantly overweight even now, maybe you can adjust a little bit. But don't get scared and do something which would amplify the already pain which we are all undergoing.
We started with the short-term advice from Sunil Singhania. Let the next 6-7 days go, be patient. And we're ending with a long-term advice from Sunil Singhania. Sunil, so important to have you on a day like this. Thanks for your time.